Today, a leading global accounting firm suspends work with crypto clients. New York regulators issue crypto guidance for banks, and FTX customers who lost thousands of dollars on the now bankrupt crypto exchange explain what's next. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Crypto prices plummeting to end the week. As of noon Eastern, Bitcoin sunk below the $17,000 level just 2 days after it topped $18,000 for the first time in more than a month. Meanwhile, Ether traded just above $1,100 and XRP dropped to 36 cents. Now, macroeconomic pressures are back in focus this week with slowing consumer spending and rising interest rates. Fears of a recession in 2023 pushed Bitcoin down more than 2% in the past week, and Ether down 0.5%. Okay, let's talk about the top stories. First, Mazars Group has suspended all work with its crypto clients, including Binance and Crypto.com, citing concerns over the public perception of proof of reserves. Now, the move comes after the global accounting firm released proof of reserve reports for several digital asset exchanges. A Binance spokesperson told CNBC that Mazars has indicated that they will temporarily pause their work with all of their crypto clients globally, which include Crypto.com, KuCoin, and Binance. In a statement, Mazars Group told CNBC it had, quote, paused its activity relating to the provision of proof of reserves reports for entities in the cryptocurrency sector due to concerns regarding the way these reports are understood by the public. Now, the statement added that Mazars' proof of reserve reports do not constitute either an assurance or an audit opinion on subject matter. Instead, they report limited findings based on the agreed procedures performed on the subject matter at a historical point in time. The CEOs of Binance and Crypto.com have tried to distinguish their own business practices from what happened at FTX following charges that the now bankrupt crypto exchange illegally used customer deposits for years. Next, New York regulators issued crypto guidance yesterday for state-regulated banks. The guidance, which is effective immediately, lays out what information financial institutions must submit before getting approval to engage in crypto-related activities. Banks now must present a business plan of the proposed activity, detail how such a service would impact the bank's liquidity, and then inform the New York State Department of Financial Services of its plans at least 90 days ahead of time. In a statement, the department's superintendent said the new policies are, quote, critical to ensuring that consumers' hard-earned money is protected and that New York regulated banks remain competitive. Last, FTX is hoping to sell its functioning units, including US-based derivatives wing LedgerX. The bankrupt crypto exchange petitioned a federal court to sell its subsidiaries yesterday. CoinDesk reported that the majority of those entities were acquired by FTX pretty recently and mostly were independently operated. Therefore, their assets remain separated from FTX. In this court document, FTX attorneys said it was a priority for the firm's current management to explore the sale or find other strategic transactions for certain units. The filing says, quote, based on their preliminary review, the debtors own or control a number of subsidiaries and assets that are regulated, licensed, and or largely not integrated into the debtors' operations within and outside of the United States. It goes on to say that the debtors believe a number of these entities have solvent balance sheets, independent management, and valuable franchises. FTX filed for bankruptcy last month, disclosing in filings that it had more than $10 billion in liabilities. All right, on to our main story. This week, Sam Bankman-Fried was arrested and charged, and now more details about what took place at his bankrupt crypto exchange are coming to light. On Tuesday, the House Financial Services Committee held a hearing on the collapse of FTX, and the company's new CEO, John Ray, testified that under Bankman-Fried's leadership, the company engaged in, quote, old-fashioned embezzlement using customer money for its own purposes. Crypto World's Talia Kaplan spoke to some of those customers about what they went through as the company was falling apart and where they go from here.
I definitely feel embarrassed and defeated by the whole process.
Jake Thacker is one of many people who had money on the now bankrupt crypto exchange, FTX.
At one point earlier in the year, I had about a little over 200K on the platform. And I had started to transition some of that out earlier as things started to indicate that there might be some issues. But at the end of the day, I got stuck with about 120K left on the platform.
Do you think you'll ever get your money back?
I anticipate maybe getting a little bit chunk back if there's some sort of settlement that's involved in all of this, but the reality of everyone getting what they had initially invested or was frozen back, I think is slim to none.
Do you think FTX users will ever get their money back following the exchange's collapse?
That seems quite unlikely to me.
Attorney Charlie Gerstein does not represent FTX customers, but his firm specializes in class action cases involving decentralized finance and other crypto legal issues.
What appears to have happened at FTX is one of two things. Sam Bankman-Fried and his associates took money, customer money, from FTX, and they either invested it in poor investments and lost it, or they stole it. And either way, it's going to be very difficult to recover.
This bankruptcy filing reveals that FTX's implosion likely left more than 1 million creditors without their funds. The collapse ranks as one of the largest corporate bankruptcies of all time after billions of dollars were wiped off the exchange in a matter of days.
What was going through your mind at the time, especially when you realized you might not get your money back?
I definitely was in panic mode for a couple of days. I don't think myself or anyone else anticipated how quickly the downfall would have happened and how drastic it would be.
It all started on November 2nd, when a report came out showing a leaked balance sheet which revealed that a significant amount of the assets of FTX's sister hedge fund Alameda were held on the crypto exchange's illiquid FTT token. The coming days saw mass withdrawals and the FTT token plummet in value. On November 11th, FTX and Alameda filed for bankruptcy, and SBF stepped down as CEO.
All of my positions on the platform that I trade were frozen. Everything just stopped working. The customer service chats were all over the place. Weren't able to get a hold of people. It was just chaos.
On Monday, the FTX founder was arrested in the Bahamas and now faces a slew of charges for allegedly defrauding customers, investors, and lenders.
We charge that from 2019 until earlier this year, Bankman-Fried and his co-conspirators stole billions of dollars from FTX customers. He used that money for his personal benefit, including to make personal investments and to cover expenses and debts of his hedge fund, Alameda Research.
Thacker, who works in talent acquisition for a tech company called Noom, says his $120,000 loss will set him back about 2 years.
I've had to really consider my finances, and that's not something I've had to do recently. I make good money as a professional, and I have other investments, and it's the first time in a number of years where I've really had to start to look at the checkbook and say, like, can I afford this right now? It's a scary position to be in.
I feel really sad about the people who have their life savings in FTX.
Singh Luthra is an angel investor who says he lost about $2 million on the crypto exchange.
I started using FTX over a couple of years ago when I came across a lot of different advertisements and FTX being promoted by a lot of different places and a lot of different sponsorships. I started by depositing a few $100,000 the first time, and over time I deposited about $12 million on the exchange. When it went down, I still had about over a couple $1 million, mostly in FTT and Solana. That was also staked for 14 plus days, so couldn't withdraw it.
What kind of legal action can FTX account holders take now?
They're going to end up participating in the bankruptcy, and the way bankruptcy works is that the assets remaining in FTX are going to be distributed among the people whom FTX owes money to, including people called secured creditors, which are like businesses that have lent them money, and users. And the bankruptcy court is going to divide up whatever assets it can get out of FTX among those people.
Both Luthra and Thacker say they have consulted with lawyers and plan to take legal action.
What is the biggest lesson you learned from all of this?
These exchanges hold extreme power in this marketplace, in the crypto marketplace. You can't go to your bank and say, hey, I'm going to use this cash and I'm going to buy this coin. There has to be some sort of third party involved. I think a lot of us are questioning the reliance on that relationship moving forward and how much we want to contribute and participate.
Less than 2 weeks before his arrest, SBF addressed reporter questions for the first time on video since the collapse of FTX. He claimed that he, quote, didn't ever try to commit fraud and didn't knowingly commingle funds.
I had a duty to all of our stakeholders, to our customers, our creditors. I had a duty to our employees, to our investors, and to the regulators of the world. To do right by them, to make sure the right things happened at the company. And clearly I didn't do a good job of that. Clearly I made a lot of mistakes or things I would give anything to be able to do over again. And I'm deeply sorry about what happened.
The sorry doesn't go very far, right? The sorry doesn't fit into my wallet.
Okay, that's all for Crypto World this week, but we will be back again on Monday, and we'll see you then.